Good morning. This is Trader72 for yet again another YouTube program dropping near you. And I hope you're well on this fine Friday morning. What a week it has been indeed. Topsy-turvy. I do love those two words, but it is what it is. I can only describe it as a sea of red and green on the markets for the day. So anyway, another day in London. A little bit more cloudy and grey today than it was the last few days. But we are coming to the end of the week, and it's been a long one indeed, and I think we all need a rest at some stage on the back end of today's last day of trading. Without further ado, let's get on with the news, because we've got a few bits of news. I mean, it's pretty much the same news driver that it has been for the past week. Global markets are on risk off. It's been another red day yesterday, as we all know from our previous show. It was red and red, deep red. The Dow fell over 1,000 points, and the Nasdaq fell just over 1%, although not as bad as the S&P 500. Tensions still rising regarding the Middle East conflict with the US, Israel, and Iran. Oil prices are the main takeaway, crude oil, and it really has been effective. I think the main concern, as you can see from actually my headlines here, obviously global markets are now on track for their worst week in months. So it's clearly going to be a pretty deep cut at the moment, and I think we're all feeling it a tad, depending on who you own in terms of stocks, or if it's just index or ETFs. It is very much affecting the market in every direction. Now, the main concern, I think, is the Strait of Hormuz, which has been cut off by the Iranians. It is a main route of crude oil out of the Middle East. It is almost like the M25, a small area M25 of the crude oil motorway, and it's certainly affecting, obviously, the supply. Obviously, an effect on supply means that the prices go up. So under supply and oversupply obviously moves the market up and down for crude oil. I think if I'm not wrong, the Strait of Hormuz is almost 20% of oil exports, so it is quite a massive amount. And when the situation means by blocked, we don't actually know for sure they're completely blocked, but it seems there are rumors that it's been blocked, and it certainly is putting the price of oil above $80 a barrel. So something to make us think. Of course, energy stocks up, airlines travel under pressure as well. It's affecting obviously lots of different markets, and obviously what it means with crude oil going up, it means the famous word inflation. Inflation is not something we want to hear, and it certainly is something we want to get rid of. And it also means that potentially interest rate cuts will not be happening while inflation is still sticky. So all this correlation of different situations are obviously all going back to the Middle East, and obviously that is the main takeaway of this week's news. European markets are about to hit their worst in nearly a year, so that's been affecting, of course, the European market. Banks, travel companies, industrial stocks have been hit hardest, as we all know. And obviously the energy factor is probably the only one that's actually doing quite well because of the prices going up. So that is where we're at really with this situation. I think it's something that we are now going into our first week, and it seems to me as if there's been some further bombing in Tehran, and I think they're upping the stakes there with the bombing of Tehran in the next week or so. I think Israel and US will be doing some further bombings. So I think at this rate, we're not quite out. Whether or not this lasts long, short term or long, we don't know. Your guess is as good as mine, and I would hate to predict these things. I personally think that potentially this won't last too much long before the Iranians potentially ask for some back channel peace, which there was actually rumors of that this week. So We shall see. It's very hard to predict this situation, these geopolitical issues, probably even harder than just the market itself. There's any other issues in terms of AI and situations like that in the background. But for now, it seems to be affecting all markets and certainly the inflation in that respect. I think the Strait of Hormuz is the one thing that we must look out for going forward, because obviously if there is blockage there, that will up the price even more towards potentially $90 a barrel or even on to $100 a barrel, which will then, with a long period, will affect pretty much inflation pretty massively and could cause a potential recession. Again, all potentials and maybes. So let's not get too far ahead of ourselves, because that's kind of what we all do these days. And I try to put my feet back to the ground. Moving on to economic data to watch out for today specifically. The big one really is the US job reports, what we call the payroll farms. That is a big one to look out for every beginning of the month. That will dictate where some of the markets will go. And obviously unemployment rate and wage growth as well is all important, especially in the US. Obviously with labor markets still strong, the Feds may delay rate cuts. We've all discussed that quite a few times, that I think we're looking at 2 rate cuts at the moment for the next year. I think we were expecting a bit more initially at the beginning of the year, the turn of the year, but it looks like now we're expecting only 2. So let's see what comes out of that. In terms of that's in terms of that. So economically, what are we looking for the job payrolls this month? So economists are expecting 59,000 to be added. So from the previous 130,000, which was actually a big number, came in much hotter than expected last month in January. Unemployment rate is expected to stick at 4.3%, with wage growth at 3.7 year on year. So I think if it beats 59,000, we can see a market, kind of moving up. I think if it goes under, then that could put us even more in the red. Although I'm not sure how much of an effect that's going to have today, obviously pending on what is happening in the Middle East, which seems to be taking center stage at this moment. So let's look at that for that number. I think the number should come out 1:30 our local time here. It's now 12:20. I'm recording this about an hour beforehand. So please, if you do want to have a look at it, obviously it comes up. I think we'll have it on the calendar. Let's have a quick look at my calendar here, which gives me all the latest news for today. And we've got retail sales coming up at 1:30 as well. We go. Unemployed. So private payroll. There we go. Non-payroll farms. There we go. So we're expecting 59,000, which is obviously down from 130,000, and that's coming up at 1:30. That is our GMT London time. And obviously the rest will go off with unemployment rate at 4.3, as I mentioned. So that's all coming out this 1:30. So please do kind of keep an eye on that for sure. Now, moving on to a couple of company news, Marvell Technology. Again, if you're into the AI market, which I tend to be slightly less as a trader, because obviously it's quite complicated. I think a lot of the YouTube traders I know like to inform you on the AI side, so I'll leave that to them. Obviously, I can give you some news. Marvell Technology, which obviously is AI chips, data center networking, is up 12% in pre-market, and obviously clearly a good guidance as well. Another sign, as it says there, that the AI trade is still very strong in the market, and I'm hoping that's going to push up some of the AI software companies, including my S&P Global, which clearly is not just an AI software company. We've gone through this before, but it seems to be have got caught in that headwind a few weeks ago when it went down. Opportunity for me, of course, to move in, which I indeed, of course, did. I wish I did more at the time, but that's another story for another time. So that was good news for Marvell. So that could push up AI stocks this afternoon, and including the Nasdaq. There, it did yesterday with Broadcom having good news. Apart from that, airlines, we all know, have Lufthansa have reported better than expected profit, but I'm sure at the moment its share price has been hammered, so probably not. So there we go. So I think the main takeaways from today, I think, is the 3 main takeaways for today, as we will see there, is obviously oil and geopolitical news from the Middle East. So watch out for oil, crude oil, and where that goes in terms of pricing. Watch out for any news on the Middle East tension, because obviously that could push inflation higher, as it says there. Secondly, have a look at keep an eye on the payroll farms at 130. It's just a recap for you guys there. Let's see if it adds 60,000 jobs. It'd be interesting to see if it does or not. Sometimes it can come in hotter, sometimes it can come lower. It will depend on February's numbers there, obviously. And then AI stocks still leading the market. Nvidia, Broadcom, Marvell, all going quite strongly at the moment, which is probably why the Nasdaq is not falling as much as the S&P 500 at this stage. So that would be the three takeaways for today's opening bell and where things go, and then we'll obviously do a recap again tonight. Now let's move swiftly to the actual market. My portfolio hasn't really changed that much. It looks like Adobe's taking a slight step back at 280 after being deep in the 280s yesterday, but still in a good spot there, a better spot than it was at the beginning of the week. It's almost up, I think, 8% on the week, so good news there. Obviously, due to various different reasons, AI being stronger, I think, as well, and the famous big short investor moving into that stock, apparently into the stock as well, and buying in at the rate, at the bottom rate of, I think it was at 52-week low at some stage last week. So let's see what comes out of that. In terms of S&P Global, strong as an ox this week. It has weathered every single storm it's come at it. Now, whether that holds, I'm not so sure, but it's 140 profit at the moment, which is quite good. Tidy amount, but not a small amount. But it's only been a week since I've actually bought into that stock. Sat on my hands. I would love to add to it. The initial idea is to add on the back end of a dip, but it hasn't. So at the moment, I'm keeping my hands firmly on my desk, under my, hands off, so to speak, because hands on my desk. I'm not sure what I'm talking about there, but hands off, I think, is the right expression. Apologies, it's been a long week. So we'll see, I think, at the moment. Now, in terms of market, as I said, at the moment, all in the red again. US 30, which is the equivalent of the S&P 500, down by 170 points. Nasdaq is also down by 145 points at the moment. So looks like that. Crude oil moving up to $90 a barrel. I've just seen this just now. Wow. That is 6% up today. So definitely the war is hotting up and causing chaos. God, I wish I'd bought now into oil at the beginning of the week. I did have an opportunity to buy at 78, but I thought it might come back down and didn't expect it to build up that way it has. So it just shows you commodities can be a hard thing to predict where that will go. But I didn't really think that we'd be hitting $90 a barrel almost by the end of this week. I wish I'd bought in. I did actually even look at it on the Sunday night before the openings. So you see, sometimes you got to go with what's out there and the news that you have. But yeah, so anyway, so clearly that's causing more chaos in terms of the markets, and it will be interesting to see how this afternoon pans out. I'm still looking very much at Visa, and I think the more I did some more research, I will of course let you know if I do. But Visa is certainly a stock I'm tracking very closely now. It's very close to where I think my entry point would be, which is around the 314, 315 mark. It did drop to 315 yesterday, but I just wanted to see where the markets go. But I think Visa is a tremendous stock with amazing fundamentals. We've gone through an analysis of it yesterday's show. Please look back to that if you need to recap on that. But certainly I think Visa will be something that I'm interested in either buying today or potentially Monday, depending on what the markets do, of course. Anything above 320 I won't, but anything around that 315 mark I think would be a great entry point, especially as it is at 24% discount at the moment off its intrinsic price. And, we all know why it's down slightly, and I think it's slightly overdone in terms of the interest rate cap. I'm not going to go into all this now, but it is what it is, so we'll track that, and I will let you know, of course, what my actions will be this afternoon. I think it will be more about hands-off situation, as it said in my headline just earlier on, just to see, because I've got a feeling with now oil nearly hitting $90 a barrel, that will cause some kind of movement depending on news. So Let's keep an eye on it. Please subscribe and like. The more views I can get, the better it is for me, of course. If not, as I said, this is all about being for my own benefit as well in terms of recapping on things. It's quite cathartic in that respect. So if you guys want to join me on that journey, amazing. As I said to you guys, I'm all about, I'm a small retail investor with a small account. And trying to work out the pits and falls of the market. I've been doing it for 11 years, and it's really about me just kind of hopefully showing some of you guys who have just started, or maybe some people that have had a bit more experience, why I'm going. Obviously, please do not blindly just copy my trades. I'm sure you'll please do your own due diligence and your own research. But I'm here just to advise into how I work, and hopefully that may help you guys. So, from Trader72, I'll see you for the second part this evening on the recap of this week and the day's trade. And please be careful. It's going to be a choppy session, I think, again. And keep an eye on the news and the 3 takeaways I've mentioned already earlier on. It's over now for me.